joining us from Philadelphia. Janney Montgomery, Scott's chief investment strategist, Mark Luschini, joins us. Good to have you back on the program, and a good 2012 to you. So let's talk first about the U.S. markets. Boy, they've started off pretty powerfully, I say, for 2012, the second best start since 2006. The question is, can these gains continue?
Well, I think to expect them to continue at the pace that we've seen over the first week and change would be a bit ambitious, but it's certainly telling. And to the extent that market lower is repeated, which is to say as the first 5 days goes, so goes the year, it's indicative of some of the enthusiasm I think investors had with regard to the prospects for equities for all of 2012. But there's a lot of work yet to be done to make sure we're not going to see further turbulence in 2012, not unlike we saw in 2011.
Yeah, and you're saying that from a technical perspective, at least, there's a lot of congestion for the S&P at around these 1,300 levels, and that maybe we've tapped out for the moment at least?
Well, notably, you notice how the market had come up around 1280, 1292 in fairly quick fashion, and then seemingly is stalled out in here. And I think it's going to require a positive surprise, either via earnings season, which we're just tiptoeing into here in the United States, or perhaps an announcement by a central bank, whether it's our own Federal Reserve here in the U.S. or the ECB, or even, for that matter, the People's Bank of China, talking about perhaps a loosening of monetary conditions more than what we've seen there so far, to probably inspire risk appetites to help to push the S&P 500 above that 1,300 level, which right now is a pretty heavy level of resistance for the market, above which then I think we get some clearing up 10 or 20 points beyond.
Yeah, and it seems like there's a consensus on the market, Mark, that the U.S. might be the cleanest of the dirty shirts around. So it seems people want to get into the U.S. equities this year. Is that what you're doing with your portfolio as well?
We are, Susan, and in fact, it's a continuation of the same theme that we had for 2011. So as much as we might have flipped the calendar, we certainly didn't flip our advocacy of thinking that and seeing U.S. equity markets being the best, if you will, cleanest shirt in a hamper. And it's relative to what looks like improving conditions here in the U.S. when so many other economies around the world are either weakening, such as in the case of Europe, or slowing, such as in the case of China, which has ramifications obviously across the entire emerging market footprint.
And Mark, it seems like right now we're seeing a comeback for the financials, at least. We talked about Citigroup, of course, leading the charge overnight. Dick Beauvais saying it could triple in the coming years. And Bank of America helping this rally. Look at these options traders. In fact, they're the most bullish on the stock in a decade's time. Can you believe it? Is it time to put cash back to work in financials, or are you looking at other sectors?
Believe it or not, we think so. In fact, we came out rather publicly last November and said so much. We looked at that sector as an area that we hadn't been in since really in 2008, and yet at the same time we know it's been completely bombed out and lacks any real sponsorship. Surveys of investment strategists across Wall Street all put financials down as a sector to avoid for 2012. That intrigues us from a contrarian standpoint. With these stocks trading in many cases at 30 to 70% of book value, I too, like Dick Beauvais had said, for patient investors willing to probably experience some unevenness along the way, think there's enormous upside potential in some of these terrific franchises to even get back to at or slightly above book value. Nothing heroic, and it'd still be an excellent capital appreciation vehicle.
Yeah, you said it. Okay, Mark, thank you so much for your time. Always good to see you. That's Mark Luschini of Janney Montgomery joining us.